Like most stocks, when a company's share price underperforms, it usually reflects concerns about its underlying business. And for Amazon, those concerns center around two key areas. The first is its core e-commerce segment, which still makes up more than half of total revenue. Many investors worry that ongoing tariffs and trade tensions could squeeze margins in this business. That concern isn't unfounded. A large portion of Amazon's marketplace, including products sold by third-party merchants, relies heavily on imported goods. If import costs rise, Amazon could absorb those costs, which would directly hurt its profitability. It's a problem that companies like Google or Microsoft simply don't have to deal with. However, if we look past the headlines, the numbers tell a different story. Amazon's profit margins are now the highest they've been since 2006, showing that the company isn't being squeezed the way headlines suggest. And that tells us that they've managed to offset the impact of tariffs, perhaps by passing some costs to consumers while at the same time improving its operational efficiency. But that's not the only reason investors have been cautious. The bigger concern lies in Amazon Web Services, or AWS, its cloud computing division. Over the past decade, AWS revenue has surged from around $2 billion a quarter to more than $30 billion today. It's been Amazon's fastest growing division, and it holds a dominant position in the industry. But competition is catching up. This chart shows AWS sales growth since 2023, and as we can see, it's still healthy at around 20% per year. However, when we compare that to rivals like Microsoft Azure and Google Cloud, their growth rates are faster at around 30%. That growth gap has made some investors nervous, wondering if AWS's dominance is starting to erode. And that matters, because even though AWS represents only about 18% of Amazon's total revenue, it accounts for roughly 60% of its total profits thanks to its high margins. So any slowdown here could have an outsized impact on its profit and ultimately investors' sentiment. But context also matters here. As this chart shows, although the growth rate is slower, AWS still generates the largest cloud service revenue in the world. At roughly $30 billion, it's nearly as large as Microsoft Azure and Google Cloud's sales combined. At that scale, slower growth is natural. Smaller competitors are simply catching up from a smaller base. So the data suggests Amazon's leadership in cloud computing is still intact.